Hello, Sushmita, and everyone who's watching on YouTube.
Hello.
So, if you see the 1 minute time frame chart, again a huge gap down.
Yeah.
We need to have a significant bar. What does a significant bar mean? Suppose this entire bar range is 10 points.
Okay.
This bull bar has to be much greater than 10 points for me to go long here. At least
Okay.
15 points. It's not like a fixed number, but you get the point right.
Yes,
It
I
has to be
understand.
more significant than the bear bar. If you
Correct.
go 2 days back, 2 days or 3 days back,
Mm. It was higher, I guess, the range.
oh no, that was on tick chart. Yeah, okay. If we say this as the example, the first bar was
Mm.
G bar. This bar is
Mm.
very much significant than this first bar.
Correct. Yeah.
If you replicate this today, the second bar should be much higher.
Yeah.
So it was not a significant bar for me to go long here. Okay, now that didn't trigger an entry. So first try to go higher, second try to go higher. This was the third time to go higher. It didn't go one tick
Yeah.
above this bull bar. It was not a very strong closing bar either. The
Mm.
price on this bar didn't go one tick above this bull bar for us to go in long. Why do we
Yeah.
have to go in long? Huge gap down, the same thing. EMA is still a magnet. Yesterday's close, yesterday's low. Everything is acting as a magnet. But then it didn't trigger our entry. Following this bear bar, we get a huge reversal bull bar. Also, this is an inside bar. This range
Yeah.
is inside this range. So this is an inside bar acting as a second entry. I did go long here, but then it failed, so I took a small loss. This is on 1 minute time frame. I also traded on tick chart. I'll show the trades later on. So
Okay.
now here, if you see, this is a weak bear leg. Why is it a weak bear leg? Strong bear bar, weak follow through, and a reversal bull bar. Strong bear bar, weak follow through, doji bar. Strong
Okay.
couple of
Yeah.
two bear bars, weak follow through. I'll show what a strong leg looks like later on tick chart. But for now, you understood this topic, right?
Yes, I understand.
Why is it weak bars? Why is it a weak bear trend? Also, if you see, if we mark this as the wedge bottom, 1, 2, 3 times price trying to move higher, this line, if you extend this wedge line,
Yeah.
this bear bar closed below the line, right?
Yeah. Yeah.
So this is a wedge overshoot. What is a overshoot? Just that if you draw the wedge bottom line or wedge top line and you see price moving beyond that line, that is a overshoot. What happens when the price overshoots the wedge channel? Usually within 5 to 6 bars, it will reverse.
Oh,
Once it
okay.
overshoots the channel, the wedge channel.
Mm.
Excuse me.
Okay. Once the overshoot happens, after a few candles, it'll raise up. Something
Yeah.
like that. Huh?
Within 5 to 6 bars. If it takes much longer, usually it will go for a measure move down. Also, suppose instead of this bull reversal inside bar, we got a good follow through bar. Good follow through bar for bears. So this is a strong bear bar. Assume one more strong bear bar closing happening.
Yeah.
Then the price would go down for a measure move with the channel height. Let me mark it for you. This is where the breakout happened. Sorry.
Yeah.
Suppose one more strong bear bar closing was happening here instead of this bull bar, price would reach all the way here. This we are assuming that bulls will get a measure more high here, right?
Yeah.
Why? Because it's a wedge bottom and all the other factors acting as magnet. But then bears got a breakout below this bull pattern, and they got a
Yeah.
good follow through. That means they will get this measure move down. At least this measure move down. It can happen that assume this bar was closing somewhere here and our stop loss would be here. We could also get a scalp down for this measurement, assuming that this bar would close here.
Yeah.
I know this is
Okay.
confusing a bit, but just keep in mind once the overshoot happens, usually within 5 bars there will be a reversal. If at all,
Yeah.
instead of a reversal pattern occurring, you find a good follow through bar, then usually it will end up for a measure move.
Okay. What is major move?
Okay. Everything you see here is a measure move. If 3 bar breakout is happening here, it is. So assume that you entered here on the close, you put your stop loss here. This is the risk, right?
Yeah.
So this is a measure and a move higher. So the same risk and same reward. It is just a scalp.
Okay. Okay.
It's not just okay. Measure moves are also magnets. Why do I say they are also magnets? Let me show you an example.
Yeah.
Okay. So here if you see 1, 2, 3 bars closing on their highs.
Yeah.
1, 2, 3. So if you draw measure move, it will act as a magnet. What do I mean by magnet? You're hoping for the price to reach 1 hour risk to reward. So other traders who get in on this trade will also be trying to get there. What is the definition of a magnet? Price pulls towards itself.
Yeah. 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 Correct.
Yeah, once the price pulls, once the price reaches the magnet, here 1:1 risk to reward is a magnet. Once it reaches that point, the price can take a pause. That means pullback can start. Pullbacks can differ, right? It can be deep, it can be shallow. It can, after that pullback is deep, it can either turn into a channel, which can be broad, or it can turn into a trading range. So all those are a possibility. But we know that at least once it reaches the magnet, it takes a pause. That pause can differ in many ways, like I just mentioned. Okay, so now here if you see, this is a small pullback channel. What is a small pullback channel? I mentioned tight channel and broad channel yesterday, if you remember, or on Friday session. Let me just revise the topic.
Yeah. Yeah. The width of the channel, right? Something like that.
Visually, if the channel is very tight, it's a tight channel. If it's very large, it's a broad channel. Keeping visual appearance aside, in a broad channel, be it broad bull channel or broad bear channel, what is a broad bull channel? Making higher high, higher low. Broad bear channels will be making lower high, lower lows.
Yeah.
So, be it bullish channel or bearish channel, if it's a broad channel, you can trade it like a trading range. Why do I say you can trade it like a trading range? The top third region will usually give you short side trades if it's a broad bull channel. What is the trend here? It's a bull breakout. So you're trying to trade in the direction of trend. I haven't taught you reversals except for wedge. That is fine. But if you have to trade in the direction of trend, you should be having a breakout, pullback, and then a continuation pattern. Continuation pattern is a tight bull channel or a broad bull channel.
No, so
So
if
if
it's a
it's a
broad channel, what does that imply? Or if it's a tight channel,
yeah,
what does it
so
imply?
you got a breakout here.
Hmm.
Here you're getting a tight bull channel. If you want to trade counter trend, meaning if you want to find trades on the short side, what is short side? You are selling. Suppose you sell here and buy here. You're buying at a lower price. You're selling at a higher price, right?
Yeah.
So you are making money. Now,
Yes. Hmm.
can you find any short trades which are profitable in this channel?
Mm,
Okay, here you can find at the last stage. Let me mark it out for you. This is the channel.
yeah.
If we expand this, I mean extend this line, there is a small breakout above this channel. If you see,
Yeah.
what did I just say in the wedge channel? If there is an
Overshoot.
overshoot, usually it will reverse in within 5 bars,
Correct.
5 to 6
Yeah.
bars.
Okay. Okay.
Yeah. Why does this reverse? See, people who are buying here are hoping for a reason to exit. Suppose somebody bought here and they use swing stop loss. Good breakout. After this breakout, pull back, good breakout. So their stop loss will be trailing here. Again a pullback, trail their stop losses here. Again a good breakout and a pullback, trail their stop loss here after this breakout. You keep finding breakouts and you keep moving your stop loss higher. Is this clear or should I explain once more?
Yeah, it is clear.
Okay, let me just go back and word it a bit properly. You're entering
Yeah.
here on the close of this third bar. Your stop loss is here, right? Initially.
Yeah. Yeah.
Where is the next point where you can move your stop loss so that you can reduce your initial risk? Initial risk was here, so you have to find a place to pull your stop loss through so that you can reduce your risk on the trade. Why?
Okay.
When you're swing trading, you're not exiting at 1 hour or 2 hour. Initially, for a beginner, it's better to exit fully at 2 hour or at least half at 2 hour because you don't know how to move your stop loss in a very fine manner. You don't know if it's a broad channel, you don't know if it's a tight channel, you don't know if it's going to be a volatile pullback or a flat tight pullback. But just for explanation purposes, suppose you're a swing trader and you got in here and you're hoping for a profit target much greater than 2 hour, you won't be exiting at 2 hour. So you have to protect your downside. Protecting your downside means you have to move your stop losses, right?
Stop loss.
But that you can't just randomly move your stop loss. It has to have a reason behind it.
Yeah, correct.
So whenever there is a pullback structure, once there is a breakout of that structure, you can move the stop loss. Here there is a small pullback, a strong breakout, move your stop loss here. Again, you can see
the next one.
This is a pullback. 1, 2, strong breakout above this pullback structure, move your stop loss here. Again a pullback and a strong breakout, so you can move your stop loss here. Again a pullback, where was the next strong breakout? Here. So you can place it here or keep it here if it's too, if you want to give more space, you can keep it here. If you don't want, you want to keep a tighter stop loss, you can move it here. Again, where is the breakout happening after this pullback? Here. So move your stop loss here. That is how you keep moving it. And once you have an exhaustion means overshoot. Why? Because people who are finding a reason to exit and secure their profits here, now got an extraordinary opportunity to get out. Why? This channel is being broken out of. What are the odds that it will keep going higher? The channel is already going higher.
Yeah.
Now you are now you have an extreme breakout.
Yeah.
Why an extreme breakout? Bull trend, bull channel. What are the odds that it will keep going higher? Usually, what it will transition into after a channel? Breakout, pullback, channel, trading range.
Okay. Yeah.
So 75% of the times, once you get an overshoot of the channel, the price will reverse within 5 hours. So only 25% of the times it will break out and give you a measure move higher.
Okay.
So is this clear? Why overshoot
Yeah.
works? Be it a
Yeah.
wet channel, a bull channel, broad bull channel, a tight bull channel, anything. Okay.
Yes, it is clear.
So now coming back to tight bull channel and broad bull channel. Here, if you want to find counter trend trades and short, what is the trend here? Bullish. So counter trend means you want to find bearish setups, but none of
Okay.
them seem profitable here, right? Till the point overshoot happened, none of
Yeah.
them seem profitable. So if that is happening, it is one sign of a tight bull channel.
Okay.
What do I mean by that? You can only make money buying here. During all this phase from here to here, you cannot make money selling
In the tight
in this tight bull channel.
channel. Okay.
Okay. There are other points also. See, let me zoom in a bit. Here, if you see, I call this a small pullback, and this was the breakout above that pullback structure.
Yeah.
So now, if you see, if I have to mark, initially there was a gap between this breakout bar and the high of this pullback structure. You can see that green box, right?
Yeah.
Why do I say initially? Because that gap got filled by this bar.
Yeah.
This bare bar went below this box, right?
Yeah, correct. It went below that.
Yeah. Okay. Now there is also a gap between the close of this pullback structures bar, and the breakout bar.
Yeah.
This is the breakout bar, right? So this is the gap.
Yes.
Why do I say gap? Because people, suppose you are here on this bar. What is the closing price? The high of this bar.
Yeah.
If you go to a line chart, what is a line chart? It will only plot the closing price. So assume
Yeah. Okay.
point. Let me. Okay, you can see this point, right? This is the closing of this candle.
Yeah. Yeah. Got
Imagine a point here. This is the closing of this candle. Imagine one more point. You draw this here.
Yeah.
One more point, and then a huge line up.
Yeah. Line up. Yeah.
So there is a gap between this point and this point on line chart. I hope that is clear.
Yeah. 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 It is.
Okay. So there is a gap between the high of the pullback structure and the closing of this breakout bar. There is a gap between the closing of this pullback structure's first bar or a pullback pivot bar and the high of this bar. Ignore the terms, they're just
Yeah.
terms. But you get the point, right? There is a gap here.
Yeah.
Now, if I extend this green box, did this bar fill that gap? Technically,
Yeah.
it just touched there, but it did close there. If you imagine a line chart here again, closing. Where is the closing of this bar? It's somewhere here. So those two,
Down.
this point is here, this point is here.
It's not the same. There is a.
Yeah, so there is still a gap,
Hmm.
right? So next
Yeah.
bar, if you see, this bar went all the way down here, but then closed here. So where is the closing? Here was the closing for the
Above.
previous bar. Now it's closing here. So first point and then second point. Nowhere in this
Yeah.
section the gap actually got filled. When it will get filled? When it closes below this point.
Yeah. When it
If there is a
was.
physical gap, I will show what I mean. What do I mean by physical gap? You will see breakouts, and the gap won't be filled so soon. What do I mean by that? See, 1, 2, 3 bars consecutively closing. Now there is a gap between this high and this high. Did it get filled? No, right? If I
No.
draw a rectangle here, did it get filled? This closing and this
No.
closing. Why? This is,
No.
although this is not a pullback structure, this is still people trying to reduce their risk. Somebody who bought here or here, they will be exiting, and somebody who bought here will be hoping for a measure more high. That is why pullbacks occur. That doesn't mean that the trend has changed. Pullback just means there is a pause in the trend. That is the definition of a pullback. So now if we go,
Okay.
if we see here, there is a gap between this bar and this bar's height.
Hmm.
Did it get filled immediately? No. What do I mean? What do I mean by filled? You need a closing all the way below this closing.
Correct.
Somewhere after this bar, there should be a price action and a closing below this bar's height or closing. Is that clear?
Yeah. Yes.
Then I can tell the gap got filled. Here, this gap never got filled. So this is an open gap. Here, the gap technically got filled. We didn't get a closing below the gap, right? We just touched
We
the
didn't.
gap and went higher. So this is a negative gap or a pseudo gap, whatever you want to call it. It is a gap which got filled technically, but not physically. Because on a line chart, the closing didn't happen below the gap. Is this much clear?
Yeah.
Why am I talking about gaps is because be it a broad bull channel or a weak bull, a broad bull channel or a tight bull channel, if you see gaps not closing, that means the odds are in favor of bulls.
Okay.
Odds, what do I mean by odds are in favor of bulls? It is hard for bears to make money in that channel.
Okay.
So you only have to trade in the direction of trend. What are the 2 points? One, I told you how to identify a tight bull channel. How do I do that? You have to see whether bears are making money. Are they making money here? No. Only bulls can make money in such a tight channel.
Yeah.
Two, if you see gaps and open gaps are still staying open, that means the odds favor bulls and the price can keep going higher. So you don't have to trade counter trend. Why? Because there is high probability of price going higher. Just trade in the direction of trend. That is how you identify a tight bull channel. These are the characteristics of a tight bull channel is what I'm explaining. There are okay. So even if it's a negative gap, it's or a pseudo gap, it still counts as a gap. And since the price didn't close below this bar's closing price, it's still an open gap. Although be it a negative or a pseudo gap. This is one open gap. This is one more open gap. Again a breakout. This is the closing. If I mark this, still a open gap. Where is the next breakout? Here. Still an open gap. Breakout. Closing. If you see, it came all the way here, still an open gap.
Yeah.
So instead of trying to find reversal setups, you can just buy anywhere here in the channel, put your stop loss properly. Suppose you bought here on this breakout bar, you missed all the trades here, you bought it here. Where should your stop loss be? Either below this bar's low or below this bar's low. Why?
Yeah.
You're trying to have a swing trade. Once it goes below this bar's low or this bar's low, the market is signaling you that, hey, I'm giving you a deeper pullback. I want to rest and see where I want to go. Either I'll be in a trading range for a while, or I'll turn into a broad bull channel, or I won't give you the opportunity to buy anymore. I'll just reverse. It's decision to make. So where is the proper stop loss to for this entry? Either below this bar's low or below this bar's low. If you bought it here, suppose you bought it here somewhere, where is your stop loss? After this breakout happens here. Before, suppose you bought it here only and this bar hasn't been printed yet, your stop loss has to be all the way down here. It doesn't matter where you buy, your stop loss has to be at a proper pivot. Why? Because it can zigzag here for a while without violating this low and then head higher.
Yeah.
Okay, so that is why proper stop loss pivots are important. It doesn't matter where you buy, just place a stop loss at a proper point, proper pivot. Now I can tell you to buy at any point and place a stop loss at a proper pivot just because it's a tight bull channel and we are still seeing open gaps staying open. Where did it close? If we see here, this was a breakout. This gap was here. Where did it close? This bar closed below this high, closing price.
Yeah, correct.
This is signaling that, okay, the trend might, the characteristic of the trend might change. What is the characteristic of the trend here? Tight bull channel. Now, it's signaling you it can be either turned into a trading range, or it can turn into a new bear trend, or it can trade. It can be a broad bull channel.
Okay.
Nobody knows and nobody can call it out. You just have to trade what you know. What do we know here? 1, 2, 3 strong bear bars closing near their lows after a wedge, after a channel overshoot. So you can short here for a measure move down. We don't know if it's going to be a trading range, a bear trend, or a broad bull channel. What do I mean? What do I mean by broad bull channel? Let me mark it out for you. This can either be doing a trading range, which it did, or it can turn into a broad bull channel. Leg 1 pullback, leg 2, leg 1 pullback, leg 2. Imagine price going all the way up here and then reversing leg 1 pullback, leg 2, leg 1 pullback, leg 2, something like that, channeling within these two lines. Or it can give a bear breakout and turn into a bear trend. Somewhat like this. These are the possibilities, right? Here it turned out to be a trading range, and then the price came higher. Is this much clear? Why tight bull channels are different from broad bull channels? Broad bull channels, the main point is you can trade in either direction and make money. What do I mean by either direction? Suppose it's a broad bull channel. You can take trades on the long side and make money, and also take trades on the short side and make money. Okay. But in a tight bull channel, you can only make money buying, especially when the gaps are staying open. Once the gap
Mm.
start closing, depending upon the price action following, you can take counter trend trades then and hope for a bear trend at trading range or a broad bull channel. Till
Okay.
that point comes, you should only buy. You should not be thinking about counter trend trades at all. Is this much clear?
Yeah, it is clear.
Okay. Now, why did I explain all that? Here, if you see, is this signifying a strong bear channel for you? Why do I call this a strong bear channel or weak bear channel? Is because I mentioned to you that when there is a huge gap down or any gap down, it doesn't have to be huge. If there is a gap down from yesterday's low, yesterday's close, or something, that gap will act as a magnet, is what I told you. But that also means that price fell all the way from here to here overnight, right?
Yeah.
So imagine leg one, some pullback, and this is the leg two. Because price moved from here to here, right? Just because we don't know
Yeah.
what happened overnight, that doesn't mean that price just somewhat skipped all this price action and came down here. It filled the order and came down here.
Correct. Yeah.
Yeah, so imagine a leg one, some pullback structure, and this is the leg two. So this is the channel. How do I say? I mean, how do you distinguish between a strong channel and a weak channel? You should see the gaps. So visually, I know it's hard at the beginning, but then if you give it enough time, you will be able to tell if it's strong or weak. Open gap, the gap remained open here. Open gap, the gap remained open here. Again, one more open gap, but then it got closed here
Okay.
on this bar. Till this point, it's better to stay away from counter trend trades if you don't know how to identify wedge bottoms. Okay, this
Sorry.
is clear, right?
I didn't understand this.
Okay, why did I enter here one tick above this bar? Although there was an open gap,
Mm.
I still entered one tick above this bar. Why did I do that? Because price tried to do something thrice against the direction of bears. It tried to move higher once, twice, thrice, and this is the fourth time. Also, this is an inside bar. So this will act as a second entry. What do I mean by second entry? I explained to you in the yesterday's video. Imagine price going higher here, coming down, and coming higher here again and closing somewhere strongly here. This was the first entry then. Suppose this didn't trigger. This was the second entry. Why second entry is important is because it has a higher probability of success than the first entry. But then first entry can be treated as a second entry if it's an inside or a outside bar with a constructive pattern. What is a constructive pattern? Wedge bottom. So you are hoping for a counter trend trade. You got a strong bull bar closing on its side, and it's also an inside bar. So that is a constructive pattern.
Okay.
You can call it anything. It doesn't matter. It's just English.
Okay.
But it failed. I'm not saying this is the only reason why it failed. It can be nobody knows why it failed or why a trade is successful. You just observe the pattern, you just trade based on the probabilities.
Yeah. Correct.
Okay. Now if you see 1, 2, 3 bear bars closing near their lows. What did I tell? Leg 1, pull back leg 2. If it's coming in the leg 2 phase, you ignore that and find a reversal setup. Usually it will turn out to be a trap. Here 1, 2, 3 bear bars closing near the lows. This is a 3 bar consecutive breakout setup, but it's coming by in the second leg of the trend. Previously I told leg 1 pull back, this will be the leg 2, the gap will be the leg 1, somewhere in the gap itself there will be a pullback structure, and this will be the leg 2. Now just for the theory purpose I'm saying this is a leg 1 pull back leg 2. So
Yeah.
whenever there is a consecutive bar breakout on in the leg 2 phase, usually it will signify a deeper pullback. So it's better to trade on the counter trend side. Also, wedge overshoot, first attempt failed. This was a second attempt.
Hmm.
I entered one tick above this bar. I'll show the trade later. Why? Because this was still a weak closing bull bar. This was a much stronger closing bull bar. Also, this is a micro double bottom. I don't want to explain that today. Too many concepts explained already. The video has gone past, I don't know, half an hour, I guess. So this was the second entry. Also, this is an outside bar. This bar's range is outside this bar's range.
Yeah.
The low is lower than the low of the previous bar, and the high is higher than the high of the previous bar.
Yeah.
So this is an outside bar. So this will also act as a second entry. One tick over this bar, you can go long, edit, exit at a swing or a scalp. I exited at a swing this time. I'll explain why later on in the recording. Again, if you see 3 bar breakout, this is the first leg, fresh leg, right?
Yeah.
So enter on the close, put your stop loss here, hope for a measure move high. It did reach here, you will exit or take profits here, or if you are swinging, you will just move your stop loss to break even and then swing the rest of the position.
Okay. Yeah.
Okay, now this is leg 1, some small pullback, and a leg 2. Assume this, okay, you can call this entire leg as leg 1, but theoretically I'm just saying this is first attempt to move lower, this is second attempt to move lower, this is the third attempt to move lower. But that say, if you see the leg strength, there is a gap between this breakout and this breakout. There is a gap between this breakout and this breakout again. The gap,
Yeah.
there is a gap between this breakout and this breakout point. The gaps are still staying open,
Correct.
and it's not even negative gap. What is a negative gap? It should at least touch this closer, right? It need not close below this low. I mean this closing
Closer
price.
to that.
Yeah, it's not even touching this point.
Hmm.
So it's still a open gap, not a pseudo or negative open gap. So the strength of the channel is much higher. So you can call this as leg 1, pull back, leg 2. That being said, again, why would you why taking 1, 2, 3 consecutive bull bars closing near their highs, so you can buy here and put your stop loss here? Why I wouldn't take this trade is because it can have a deeper pullback and then head higher. It can hit my stop loss and then go higher. I would rather wait for a pullback structure and then enter.
Yeah.
Okay. Why? Because this is later in the leg itself. If you call this entire region as a one leg, this 3 bar consecutive breakout is happening at the later stage of the leg. So it's somewhat like this breakout is happening on the second leg. So avoid those. Is this much clear here?
Yes.
I know a lot of new concepts, so take your time and ask me if you have any doubts. I'll just replay the trades which I took today. Okay, huge gap down. This is on tick chart. Yes, that was on micro E-mini, the 1 minute time frame chart which I used to explain now.
Yeah.
This is a significant bar, but this significant bar is on the opposite side of the magnet. What are the magnets? The EMA is above, the yesterday's close, yesterday's low, all those points are magnets, and it's in the opposite direction. So I didn't want to short sell this. I wanted a significant bar in the upper direction. This bar didn't close all the way strongly. So I cancelled my order. It didn't get triggered. So this is the first attempt to do something against the bears, trying to take the price lower. So this is the second time bulls trying to take the price higher against the bears. Here, if you see, this is the third time, and soon as I placed my order, it got triggered, and I priced my profit target. Okay, now if you see, first time, this is the first attempt at bulls trying to take the price higher. This is the second, and this is the third. Or you can ignore this and say this is the first attempt and this is the second attempt. Also, this is a significant bar. Although it's not all that huge as this bar, it's still good enough or a decent enough significant bar for me to take the trade in the long direction. This was the first trade. Okay. This was the second trade. What is this? Leg 1, deeper pullback, leg 2. And in the leg 2, if you see 1, 2, 3, strong 3 consecutive bear bars closing near their nose. What did I tell? It will usually turn out to be a trap. So it doesn't mean that it won't work. The odds favor bulls here rather than the bears. So it's better to wait for a pullback structure if you want to trade in the short side. And as soon as this bar closed, I entered the stock market order and it got hit. I could have actually moved it much higher, but then the first trade was also more than 5-point profit. It was almost 7-point or 8-point profit which I took. I was already up for the day, so this was just a bonus trade for me, and I didn't want to risk it. If it gives me 4.5-point profit, it's fine. It's just an additional bonus profit for me. So that's what I did. These were the two trades here which I took, and okay, I forgot to record this trade on the 1 minute time frame chart. I thought it was recording, but it wasn't. Here I went long, it hit my stop loss, and here I went long, and I scaled in. Okay, I entered one contract here, and then I scaled in somewhere here, one more contract. There were two contracts here, that is why the average price is somewhere here, and I exited one contract here, and I put my other contract here. Because I was swing trading, I wanted to not give away anything back. Because I was already sitting on huge profits for the day. Whatever I made here is just a bonus. It did go all the way to the profit target, but then I exited a bit sooner. It was stalling here, and it was almost very close to my profit target, so I closed the trade. So those were the four trades which I took today. Out of three, three were winners and one was a loser here. So if you have any doubts, please do ask. I know it's a lot of concepts. I have to make a course video on everything which I have taught you. Not taught you, just introduce the terms to you. Broad bull channel, tight bull channel, small pullback bull trend, small pullback bear trend, micro channel. There is a lot of terms which you still don't know, and I have to make course videos on that. I still have to. I haven't recorded or planned the structure for it, so when I do that, it will be much easier for you. But till that happens, I hope you just remember these terms and what they signify. Open gap, negative or pseudo open gap, broad bull channel, a tight bull channel, trading range. Price action always gives a breakout first, then pull back, and then it can decide whether it wants to go to a channel. The channel can be either a broad bull channel, a weak bull channel, or if it doesn't want to go into a channel, it can directly go to a trading range. and then price can either break out in the upper direction and continue the prior trend, or it can break out on the lower direction and give you a new bear breakout, and the process will repeat again. Your job is to only identify what it's printing or what it's trying to say to you.
Yeah.
You don't have to assume anything in the market. Whatever it's trying to say, if you get used to those terms, it will be easier. Here, open gaps are staying open. It's not even pseudo or negative gap. So it's a strong leg up, or it's a strong channel, strong tight bull channel. So you can consider this as a leg 1, pullback, leg 2.
Oh, okay.
So if I have to show you just one last thing, this is again a trading range, not a broad bear channel. Okay, let's stop here for today. Whenever the live example comes by, I'll explain to you the concept.
Okay.
You seem very low. I understand it's a lot of new words, but it's not that hard once you get used to it. It's just pattern recognition. Whatever it's trying to say to you, you just have to listen to it and not assume anything. You don't have to put much of your brain work. See, you and I are speaking in English right now. Initially, it was hard for us to learn, right? It was not our mother tongues.
Yeah.
But once we get used to it, you need not understand everything. If I skip a word in between, you can still make out what I'm trying to say. In a sentence, if I skip a word and I just give you a sentence that way, you still understand what I'm trying to convey. Same way here also, you need not sit and break your head. Okay, this is an open gap, this is a negative gap. No, you don't have to do that. Initially, yeah, those concepts help you to recognize what is happening. Once you get used to the pattern, you need not worry so much. It's just like if when you're driving car, you don't have to think about gears or clutch or brake or accelerator. Initially you have to, but then later on you get used to it. It's just a memory, right? The same way here also, you train yourself, and once you create that memory, it will stay there. So give yourself at least 4 months to understand all the concepts. After that, you will be able to trade yourself.
Yeah, hopefully.
Yeah. There is nothing to hope here. It's just another profession if you take it that way. Okay, then thank you guys, and thank you Shweta for joining.
Thank you.